You really can't argue with the fact that CPI is negative. It was a negative 0.1% last month, not just lower growth. It's not because, you'll see a lot of headlines like last month we saw headlines or whatever, the last CPI report, we saw headlines of a cool down, but really it was slower growth. Yeah. This is actually negative growth. So I think that that's meaningful. And one indication is, and you said this again, it's like you can't blame one person for the economy. A lot of people critiques of the Biden administration will try to have been using inflation as an argument. Yeah. I don't think anyone really is responsible for the wins or losses, any one person other than Powell. But I did listen to this morning. I listened to a news report about the price of eggs. Yeah. And if they've got to get to egg prices, then maybe inflation's doing a little better than you think.
Yeah. If eggs are what we're holding on to, eggs aren't nearly as important as gasoline or other food items. I mean, it can't be helpful. But I mean, just looking at food, I mean, what was even food here? Let me go to the
food's pretty. If I remember correctly, food is still up.
Yeah, it's significantly. It is up. It's up 0.3 compared to November through December. But it's much better than September to October. I mean, it's half.
Yeah. I will say, it does feel like I'm spending a lot more on groceries now. Yeah. And that's the quintessential experience of inflation is what's your grocery bill? And that's actually, it's almost like concentrated there. There's a lot of other aspects, but food's up a lot. You know what is still up, and it frustrates me, is rental inflation. So year over year inflation.
Are we moving off the egg conversation?
Oh, sorry.
No, I'm kidding. Yeah. But yeah, I mean, look at that though. I mean, that's 11. That's a lot.
11% more in just 1 month.
Okay.
And year over year, 59% higher than it was last year.
Wow. What are people doing with these eggs? Is there a we talked about this, man? We don't know if we looked it up. Is there some kind of do they have to do a mass killing of chickens?
I thought that was the reason that I heard from the news report was avian flu.
Avian flu.
Now I think that
poultry.
No, while you're pulling that up
as we digress.
So yeah, the year over year for all items, maybe I need to check core items, but that's at 6.5, and so it is less than it was than the year over year was last month, and again, I'll return to let's get some of this information on these.
Well, now it's giving us an ad, but I mean it's according to Acadiana's KATC3 ABC, experts say bird flu is impacting egg price.
I was thinking about this. You can point to discrete things, and that was what the argument against inflation was. It's like, it's just no. It's not inflation. It's hard to ship. Metal is really expensive. It's this, it's that, but it's all collective.
Yeah, well, it is all collective. But this is one of those. And we have to separate the actual transient, short-term inflationary pressures, which would be like the supply chain stuff, to the longer running pressures of inflation or deflation, whether that's like onshoring or like the nearshoring of jobs and manufacturing. That's inflationary over time. Like an aging population and technological advance, that's deflationary over time. And there's going to be some short-term spikes, and that are going to cause inflation and prices to go up. But we can breed more chickens.
Yeah, that's true. It's not like it's not like demand has increased so much and we just can't make any more eggs. Yeah. It's like, no, we had to
kill a bunch of birds. Yeah. But I mean, like lumber. I mean, lumber is still expensive, but it's not like it was in the middle of 2020.
Yeah, it is like half. I remember lumber was almost like 1,000.
Yeah.
For whatever its unit price that we track, and now it's down to like 300, 400.
Yeah, which is still elevated compared to before COVID, but it's come back down.
Yeah. So it is interesting, to look at all these different things, and to your point, to separate what price increase is the result of a larger trend that we should be worrying about, and what's something that's fixable.
Yeah, a little more flash in the pan, and okay.
So going to rent, I think that this is one of the more frustrating results that I got from this rent report. rental inflation is still paradoxically high. This past December, rental housing was up 0.8% month over month and was up 7.6% year over year. Now, I want to give a little bit of a context and call back to an article that we covered last month from the Cleveland Fed.
Yeah.
It constructed an alternative measure of changing the changing price of housing rentals, and pretty much the distinction that they made, which is not a new one at all, is that the CPI measures rent growth that hits people's pocketbooks, so it's what their experience of inflation is, and the private rent metrics like we get from Apartment List or Zillow has one, or Yardi Matrix. Those are all the decisions that are being made in the marketplace. So it's a different ways of thinking, but like. Another point that I learned kind of in the Cleveland Fed article was that the CPI does do work. They actively are trying to adjust their measurement of rent so that it is helpful for people, so people can use it. But their goal is, I think, on an accurate picture of the pocketbook thing, the pocketbook part, not the marketplace part. The Cleveland Fed, it's part of the Federal Reserve System. Yeah. So obviously someone in the Fed is worried about this, or at least thinking about it. And I think that
so that they can properly discount it.
Yeah, well, I don't know.
Because there's no rule.
That's a good
there's
point.
no
that's
rule
so,
that says they're like,
so good.
Well, CPI said, rent.
We made this report.
Shelter, we can't.
We made this report in Cleveland, so we're just going to keep things the same. I think that they're keeping it the same because they want that accurate picture of people's pocketbooks. I would love an alternative measure just to be included with like asterisks next to it if you want to see what the market price is.
You should go into the beige book and read the minutes, see if they're talking about it.
Oh yeah, that's a good idea. And the other thing that the Cleveland Fed...
Matt, you're like, you want me to go through that?
I know. Well, okay. All right.
Load it into ChatGPT.
Some of the stuff in the beige book is really interesting, little tidbits.
Yeah.
The other point that the Cleveland Fed made was that the CPI rent measurement pretty much lags these new market rents by 12 months, maybe 13. I'm pretty sure they said 4 quarters. About a year. And that's what's frustrating is like, I'm looking to see when the rent deceleration is going to pop up in the CPI. We may have 6 more months of this.
If it's, I was going to say, if it's 12-month lagging.
Yeah. So it maybe this month was 0.8. Maybe we'll start to go down. I don't know where the trajectory is, but I bet it'll
start to go down in just a couple months, in 3 months, around March.
Yeah.
March and April. That's when things started, I think, changing a little bit.
Yeah, that makes a lot of sense. And so with that in mind, we're going to see a lot lower CPI. Right now, the CPI is like kind of artificially high, and I forget how much percentage that it accounts for, but it is a significant amount.
For housing, it's it's 32.9. Yeah, 32.9 for shelter.
So so it's a big chunk, and that's going to really have a positive effect on the inflation situation.
So maybe 25 basis point increases the next meeting or two, and then they're gonna plateau and go flat.
I hope that they just let's just not do anything.
Yeah.
It's easier. You don't have to flick the 25% increase button. There are articles that have already been written that said, hey, maybe we just stop it. Maybe we already did too much, and it's already gone up too much, and we should just coast now. We're good.
I think there's definitely a lot of people who think that and want that to happen. I think there's a good case to be made. I believe, though, the Federal Reserve they see a much greater degree of risk of misreading and giving into the market and lowering rates or just not raising rates too soon. Mm-hmm. And because for 2 reasons. One, if inflation does persist, they'll have gotten it wrong again. Mm-hmm. And 2 is it's a credibility thing. They don't want to be seen as, kowtowing to the market, just because the stock market wants, rates to go down and other markets want the rates to go down, doesn't mean they can give into it. And they have to have some, legitimacy and see it through and be persistent. And I think that, in the minutes from the last meeting, they were very clear that, if we see a rally in the stock market, that's not necessarily going to be, we'll see that as a reason to keep rates higher. Mm-hmm. And we don't care about where the S&P 500 is right now. We're looking at, stable prices and employment and employment's doing well, so we really need to focus on stable prices.
Yeah.
And we've got some room to hit the stock market and the rest of the economy because looking at employment, we know we're in a good spot.
Yeah, it is. It's going to be, again, we're on the halfway point of a lot of these cycles, and one of them may be the interest rate cycle.
Yeah.
This is going to be an exciting first quarter.
Yeah.
That'll really actually, I guess it's a hope, but we're going to set the stage here. Things may be uncertain for a limited but finite period.
Yeah.
And after which we may have a window where we can make some predictions.
I think so. And just to throw like an early prediction, could not be the case, but I think there's a possibility that, we do get rates to level off and we see demand coming back. So I know we've got a couple other articles, I think today, that talks about it, just like the potential pent up demand because people have been putting off this decision to rent or to get a house or whatever it is. And that demand is going to be released at some point.
Yeah, I think so. Because it works both ways.
It works both ways.
Yeah.
Yeah. And so I think we're going to get on the other side of that. Again, maybe it's March, maybe it's September. But I think sometime this year we're going to see a market that looks pretty attractive. And then the key is there an entry point before that? And once we're in that point of kind of stability, normalcy, able to predict, things are looking good, everyone's going to be piling in at that point. And so is there a safe way to get in kind of before the frenzy starts again? Because I can just tell you from talking to people who are in the multifamily industry, people are still looking for deals.
Yeah.
It's not like people are leaving the market.
Yeah.
It's just that good deals are hard to find right now.
Mm-hmm. This is going to be, I think that there are these high flying, and we can kind of get into some of this in a little bit, but some of the continued strong performance of a lot of these multifamily markets that you'd think would be joining the rest of the nation and sinking down. It's almost like there's signs like maybe we don't have it as bad as maybe the rental situation isn't as bad, and the proof is that some of these high flyers are still flying pretty high.
Yeah. Good point.